Hey guys, welcome back to another episode. In this video we will be going through our very simple, yet profitable ICHIMOKU trading strategy that you can use in the forex, stocks, and crypto market. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. ICHIMOKU Kinko Hyo is a type of technical indicator analysis method that is often simply called ICHIMOKU. It is based on Japanese candlestick charting to predict future price movements. Only in the 1960s did ICHIMOKU came to the attention of the public when a Japanese journalist named Ichimoku Sanjin, also known as Goichi Hosoda, released it publicly after 3 decades perfecting it. The idea behind the ICHIMOKU cloud strategy is to use a moving average-based trend method to indicate where a stock is likely headed next. In addition to price action, ICHIMOKU uses time as another element, and because greater data points are used, it is generally regarded as providing a clearer picture than Japanese candlesticks. The name ICHIMOKU Kinko Hyo tells a lot about the trading system, or at least it gives a description of the system. ICHIMOKU is one look, or glance. Kinko is balance, or equilibrium. Hyo is chart, or graph. ICHIMOKU trading attempts to identify a probable direction of price. It helps the trader determine the most suitable time to enter and exit the market by providing you with the trend direction. It gives you reliable support and resistance levels and the strength of these market signals. And now, before we delve deeper into the ICHIMOKU strategy, let's look at the indicators needed to successfully trade the strategy. What is the ICHIMOKU in trading? The ICHIMOKU is one of the most comprehensive technical indicators in modern use. The ICHIMOKU indicator paints all the components needed to help visualize the price action better. Unsurprisingly, it has quickly become the go-to indicator for forex and stocks traders around the world. So, let's define all the ICHIMOKU Kinko Hyo components. We will review how to correctly interpret the trade signals generated by this technical indicator. ICHIMOKU explained. The ICHIMOKU is a momentum indicator used to recognize the direction of the trend. It can also define accurate support and resistance levels. The ICHIMOKU indicator consists of 5 main components that provide you with reliable trade signals. Tenkan-sen, or conversion line, is the midpoint of the highest and lowest prices of an asset over the last 9 periods. The Tenkan-sen is part of a larger indicator, called the ICHIMOKU Kinko Hyo, which shows potential support and resistance areas based on different timeframes. It's calculated with the following ICHIMOKU formula. The Kijun-sen line, also called the baseline, is the midpoint price of the last 26 periods and therefore an indicator of short to medium-term price momentum. It's calculated with the following formula. The Chikou span, also known as the lagging span, it is created by plotting closing prices 26 periods behind the latest closing price of an asset. Senkou span A, also called the leading span A, represents one of the 2 cloud boundaries, and it's the midpoint between the conversion line and the baseline. This value is plotted 26 periods into the future, and it's the faster cloud boundary. Senkou span B, or the leading span B, represents the second cloud boundaries, and it's the midpoint of the last 52 price bars. This value is plotted 52 periods into the future, and it's the slower cloud boundary. How to use ICHIMOKU indicator in trading. ICHIMOKU cloud is designed to spot direction and momentum in order to help you make buy and sell decisions more easily. While the ICHIMOKU indicator involves multiple different lines, reading the graph is actually very easy. Once leading span A and leading span B have been identified, the cloud component of this graph will be shaded in. When leading span A is above leading span B, this indicates to traders that price momentum is currently increasing. When this is the case, the graph will be shaded green. On the other hand, when leading span A is below leading span B, the underlying asset is likely moving in a negative direction. When this happens, the cloud will be shaded red. Despite the graph's complications, simply looking at the colors of the cloud can help you determine the direction of the market. Here are some basic interpretations of the Ichimoku charts. First, when the price is above the cloud, we're in a bullish trend. Second, when the price is below the cloud, we're in a bearish trend. Third, when the price is in the middle of the cloud, the trend is consolidating or ranging. Furthermore, the Ichimoku charting technique provides bullish and bearish signals of various strengths. When the Tenkan-sen crosses Kijun-sen from below, it is considered a bullish signal. When the Tenkan-sen crosses the Kijun-sen from above, it is considered a bearish signal. Because many of the lines on the Ichimoku chart are created using averages, the chart is often compared to a simple moving average chart. However, Ichimoku is more dynamic than a simple moving average chart, as it's designed to help detect changes in support and resistance. The relationship between leading span A and leading span B will indicate whether there is a strong downtrend or uptrend. Pay attention to both the color. Green for bullish, red for bearish. And the size of the cloud. When the cloud between these lines is small, then the trend will not be very strong. The Ichimoku is useful for day traders, scalpers, swing traders, and others who need to make quick decisions. Ichimoku trading requires a lot of self-discipline. This is because you have to wait for the best trade signals. How to use the Ichimoku indicator when trading. Now we are going to discuss an Ichimoku trading system, which does not require any additional indicators on the chart. This Ichimoku trading strategy is applicable for every trading instrument and time frame. Placing a trade when the price closes outside the Kumo or cloud. This method could also be coined the Ichimoku breakout trading strategy. This is because the trade trigger occurs at the point the price breaks through the cloud. First, you open your trade in the direction of the respective breakout and then hold the position until the security breaches the Kijun-sen, or blue line, on a closing basis. Ichimoku trading system helps the trader determine the most suitable time to enter and exit the market by providing you with the trend direction. It gives you reliable support and resistance levels and the strength of the market signals. Ichimoku indicator trading strategy. Buy rules. Step 1. Wait for the price to break and close above the Ichimoku cloud. Ichimoku trading requires the price to buy above the cloud. This is because it's a bullish signal and potentially the beginning of a new uptrend. The cloud is built to highlight support and resistance levels. So, when we break above or below the Ichimoku cloud, it signals a deep shift in the market sentiment. Step 2. Wait for the crossover. The Tenkan-sen or conversion line needs to break above the Kijun-sen or baseline. The price breakout above the cloud needs to be followed by the crossover of the conversion line above the baseline. Once these two conditions are fulfilled, we can look to enter a trade. Step 3. Buy at the opening of the next candle. So, after the crossover of the conversion line above the baseline, we buy at the opening of the next candle. Step 4. Place protective stop loss below the baseline. The ideal location to hide our protective stop loss is below the baseline of the crossover candle. This trading technique accomplishes two major things. First, it's significantly lowering the risk of losing big money. Second, it helps us trade with the market order flow. Step 5. Take profit when the price closes below the baseline. We only need one simple condition to be satisfied with our take profit strategy. When the price closes below the baseline, we want to take profits and exit our trade. Sell rules. Step 1. Wait for the price to break and close below the Ichimoku cloud. Ichimoku trading requires the price to sell below the cloud. This is because it's a bearish signal and potentially the beginning of a new downtrend. A high probability trade setup requires more layers of confluence before pulling the trigger. This brings us to our next requirement for a high probability trade setup. Step 2. Wait for the crossover. The conversion line needs to break below the baseline. The price breakout below the cloud needs to be followed by the crossover of the conversion line below the baseline. Once these two conditions are fulfilled, we can look to enter a trade. Step 3. Sell at the opening of the next candle. So, after the crossover of the conversion line below the baseline and the price close below the Ichimoku cloud, we sell at the opening of the next candle. Step 4. Place protective stop loss above the baseline. The ideal location to hide our protective stop loss is above the baseline of the breakout candle. Step 5. Take profit when the price closes above the baseline. We only need one simple condition to be satisfied with our take-profit strategy. When the price closes above the baseline, we want to take profits and exit our trade. Here are other examples of the ICHIMOKU trading strategy. When trading with the ICHIMOKU indicator, you should be extremely careful not to ignore a signal, and it is highly recommended to always monitor your open positions. The reason is that you could miss an exit signal, and a winner could just as easily turn into a losing trade. Remember, never give up on your trading strategy principles, and never compromise any of your rules for profits. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.